All right, welcome back, everyone. Today, we're going to be diving into the world of corporate venture capital.
CVC.
CVC, exactly. Where these huge companies invest in all those up-and-coming startups.
Yeah.
But it's not always as simple as it sounds.
No, not at all.
So we're going to unpack all that, the processes, the motivations, all the different flavors of CVC.
What's fascinating is that, there isn't just one way to do CVC.
Oh,
It's like there are different schools of thought, different playbooks that these companies are using.
interesting. And that's what we're going to explore today, right?
Oh, exactly.
Get this. We uncovered two main pathways of CVC.
Oh, wow.
Two totally different approaches with very different outcomes. Almost like choose your own adventure in the world of corporate venturing.
Like that.
Our guide for this deep dive is going to be this research article. It's called Heterogeneity in Organizational Search Behaviors, the Case of Corporate Venture Capital Units.
Catchy title.
It is, and it's full of great stuff.
Ah!
Yeah, it's based on interviews with real CVC executives.
That's fantastic.
Oh, and I should probably introduce you properly. You're amazing at explaining complex info.
Well, I try.
You make it both understandable and super relevant.
I appreciate that. Happy to be here.
Perfect. So before we get into these two mysterious pathways that we're going to be talking about,
Yeah.
let's just do a quick recap what CVC is really all about. Why do companies even bother with this?
So, on the surface, it seems simple, right? It's about investing in promising startups, making some money.
Right.
But it's not that simple. It's way more strategic than just the financial side of things.
Oh, okay.
Imagine like a big company. Maybe they're feeling a little slow, a little behind the times with all this new tech.
Mm-hmm.
CVC is their way to, get some of that startup energy, fill in those gaps in their innovation.
So it's not just about making a profit.
No, it's much more than that.
More about staying ahead of the curve.
Right.
Maybe even disrupting themselves before someone else does.
Exactly. Yeah. That's why companies use CVC to get access to cutting-edge tech, top talent, even like whole business models
Wow.
that they wouldn't be able to develop internally on their own.
I see. Like a shortcut to innovation.
You could say that.
Okay, so now the heart of it. The two CVC pathways that the research uncovers,
Right.
they call them, and these names are pretty evocative, they call them order takers and freebirds.
Yes, and you know what? The names really do capture the essence of these approaches.
Okay.
Let's start with order takers. Think of them as like the worker bees,
Diligent.
diligent, yes.
Yeah.
In the corporate hive,
Buzz.
if a business unit has a specific problem, the order taker CVC swoops in to find a startup to fix it.
So very focused, very targeted, like corporate matchmaking for innovation.
Yes, and their search process is very structured. It's not random.
Oh, okay.
They have a clear goal, a problem to solve. It's like they have a shopping list, and they're carefully checking off each item.
Interesting. Does that laser focus ever backfire, though? Because, the startup world is all about agility
Yeah.
and speed. Do they ever miss out by being tied to just their parent company's needs?
Yeah, that's a great point. And the research actually found that order takers can be slower to make decisions.
Oh, interesting.
They're bound by corporate bureaucracy
Makes sense.
and multiple layers of approval. It's a process.
Yeah, it makes sense. It does sound like they're playing a little bit of catch-up,
Yeah.
reacting more than anticipating the next thing. Okay, so let's talk about those free birds. They sound a lot more, free.
They are. They operate with a different energy. Think of them as the scouts, the explorers of the corporate world.
I like it.
They're out there looking for the next big thing. Disruptive tech. Startups that could change the future of their industries.
So they're not just trying to solve existing problems.
Mhm.
They're thinking about the problems a company should be thinking about.
Precisely. And they have a lot more autonomy.
Then the order takers.
Yes, compared to order takers.
Mhm.
They're less concerned with, immediate needs and more interested in startups with huge growth potential.
So they're taking bigger swings,
They are.
betting on the game changers.
Exactly.
I'm starting to see how these two approaches could have very different results.
Yes.
But what drives this difference? Why are some CVCs order takers and others free birds?
$1 million question, right? Well, the research, it says it all comes down to the locus of problem formulation.
Okay, I'm intrigued.
In other words, where does the problem the CVC is trying to solve come from?
Break it down for me.
So for order takers, the problem is internal.
Okay.
It comes from within the company. It's very top-down, driven by what that existing business needs.
Got it. But for free birds,
It's external. They're looking at emerging trends, asking themselves, how could this reshape our industry?
Oh, I see the difference.
Yeah.
It's like two completely different lenses for viewing the startup world.
Exactly.
One solving problems, the other's anticipating disruptions. Fascinating.
And this difference impacts the entire CVC process.
Whoa. Okay. It's everything. From how they search, how they evaluate, even how they add value after the investment.
This is all so insightful. It's like we're seeing the DNA of these two different approaches.
Yeah.
So are you ready to dive a little deeper into the differences?
Absolutely. Let's unpack how they navigate the 6 key sub-processes of CVC, from deal origination all the way to exit.
Okay, sounds good. Listeners, get ready. We're about to uncover the inner workings of these two CVC pathways.
Oh.
Okay, so we've laid out these two different approaches, the order takers and the free birds.
Yeah.
But how do those differences actually play out, in the real world? What does it look like when an order taker goes searching for a startup compared to a free bird?
It's a good question. It's like comparing, I don't know, a surgical strike to a deep-sea expedition.
Whoa, okay, I like that.
Let's stick with those order takers for a second and walk through their process.
Right.
Remember, they've got that shopping list of needs.
From the parent company, exactly, from the parent company's business units. So step one is all about finding startups that check those boxes.
Where do they even start, though? Are they like, I don't know, scouring pitch decks, going to all the industry events?
Well, a lot of times, they actually start internally.
Oh,
They
interesting.
tap into the knowledge of those business units.
Makes sense.
I mean, think about it. Those business unit leaders are the ones on the front lines dealing with those problems every day.
Right.
They probably have a good sense of what solutions are out there, what startups are making waves.
So it's like crowdsourcing innovation from the people closest to the problem.
Exactly. And they don't stop there. They'll reach out to their network, industry experts, other CVCs.
Casting a wide net.
Yeah. It's all about finding those hidden gems, those startups that might not be on everyone's radar.
Okay, so they've got their leagues. They're sitting on a pile of potential startups.
Right.
How do they decide which ones are worth pursuing?
That's where the screening process comes in. And for order takers, it's all about minimizing risk and making sure everything aligns with their strategy. Remember, they're not just looking for a good investment. They're looking for a startup that can actually work with their parent company.
So it's not enough for the startup to just have a great product or team.
It's not enough, no.
They have to fit in with the corporate world.
Exactly. They need to demonstrate that.
Interesting.
So that means a lot of people get involved in the screening process. Order takers bring in experts from engineering, product, marketing, even legal.
Wow.
It's a deep dive into the startup's tech, their market, even like the cultural fit.
Intense, like a startup audition?
You could say that.
Yeah.
And for a startup, this is where things can get tricky.
Yeah.
They need to be ready to answer those tough questions, show they understand the parent company's business,
Got it.
and prove that their solution can be integrated.
So it's like they need to learn the corporate language,
Yes,
play the game.
exactly.
Okay, this vetting process, does it extend to due diligence too?
Oh, absolutely. Order takers leave no stone unturned.
What?
They go over financials, scrutinize contracts, do background checks on the founders. It's thorough.
So if a startup wants a quick and easy investment, order takers are probably not the right fit.
No, probably not.
They're in it for the long haul, prioritizing stability over speed.
Exactly.
Okay, now let's contrast that with the free birds.
Right.
Remember, they're driven by a different set of motivations.
Totally
They're
different.
not looking to just fill a gap.
Right.
They're looking for the next big disruptor.
That's it. So their search process is completely different.
So how does their search differ?
Well, first off, no shopping list.
Oh, okay.
They're casting a much wider net,
Mm-hmm.
looking for startups that are pushing boundaries,
Like really shaking things up.
Yes, their search is less about finding a solution and more about finding those companies with that it factor.
The potential to be huge.
Exactly.
Yeah.
So they're at the conferences, they're reading all the tech blogs.
They're in Silicon Valley.
Yes,
Mm-hmm.
they're immersed in that whole ecosystem, building relationships, spotting those rising stars.
I like it. So they've identified some promising startups.
Yep.
What's their screening process like? How do they narrow it down?
Unlike the order takers, they're not as concerned with, immediate strategic fit.
Right.
They're more interested in the startup's potential for growth, how well it can scale.
So their screening is less about corporate alignment
Yeah,
and more about like market leadership potential.
exactly. They'll still do due diligence,
Of course.
but they're looking at different things: the market size, the team, the competition, the overall vision.
And because they're not as bogged down by all the corporate stuff,
Right.
They can probably move a lot faster than the order takers.
Got it. And speed is critical in this world,
Yeah.
especially when you're dealing with these high-growth startups.
Right.
Free birds know that the best startups have lots of options, so they got to move quickly.
It's like a high-stakes poker game.
I like that analogy.
Gotta make that bold bet.
Exactly. And this difference in approach, it goes for due diligence, too. Order takers are scrutinizing every detail. Free birds are taking more calculated risks.
So they're willing to gamble a bit more.
They are, if they believe in the potential payoff.
Yeah.
And because they have more autonomy, their due diligence is much leaner.
Less hoops to jump through.
Exactly.
Oh.
So let's say they've done their due diligence.
Yeah.
They're convinced this startup is going to be huge.
Time to invest.
They're ready to invest. How do they structure the deal, though? I bet it's pretty different from the order takers.
I bet so, too. So how do they approach it?
Well, remember, order takers are all about control, right?
Aligning with the parent company.
Yes. So they negotiate terms that give them a lot of say in how the startup operates.
Things like board seats, veto rights, maybe even clauses that stop the startup from working with competitors?
All of that. They want to protect their investment.
Right.
Make sure the startup delivers what they promised.
Makes sense for them, but kind of stifling for the startup, maybe?
Yeah, you could say that.
Right.
Now, free birds, they understand that the best startups are driven by passionate founders.
Yeah.
People who want to build something truly groundbreaking.
Mm-hmm.
They know that too many restrictions can kill that spirit and hinder growth.
So they're more hands-off, letting the founders do their thing.
Exactly. They're happy to take a minority stake, even if it means less control.
So more like partners than, I don't know, overlords.
Precisely. And this different, it shows up in the approval process, too.
Ah.
Order takers, they've got that need for alignment, risk mitigation, lots of approval.
Multiple sign-offs, presentation.
The whole 9 yards. It can be a long road for those startups.
Yeah, I bet. But free birds, more streamlined.
Much more.
They can move faster, seize those opportunities.
Exactly. And that speed is a huge advantage in this world.
Makes sense. Okay, so we've covered a lot. We've seen how they search, how they evaluate, how they structure those deals.
Yeah, it's a lot.
But what happens after the investment? How do they support these startups? How do they get that return on their investment?
The big questions.
Yeah.
And that's where we'll pick up in the next part of our deep dive.
Ooh, listeners, stay tuned. We're about to uncover the final chapter in this whole CVC story. Welcome back to the show. We've been on quite the journey, exploring these two different approaches to CVC.
Order takers and those free birds.
Yeah. We've seen how they search for these startups, how they evaluate them, even how they put those deals together.
It's fascinating, isn't it?
But it doesn't just stop there, right?
No, read it up.
There's this whole post-investment phase where things get even more interesting.
Oh, absolutely. This is where those philosophical differences, between the order takers and the free birds,
Yeah.
it really comes into play. How do they support these startups? How involved do they get? What are they hoping to get out of it in the end?
Right, because it's one thing to write the check,
Hmm.
but it's another thing entirely to help that investment grow and hopefully reap the rewards, both strategic and financial.
Exactly. Let's start with the order takers, those worker bees.
Okay.
Remember, their main goal is to solve that specific problem, fill the gap for their parent company.
Right.
So their post-investment focus is all about making sure that happens.
So they're not just sitting back and watching.
Oh, no, they're very active.
Yes.
They're constantly monitoring the progress,
Okay.
tracking those key performance indicators, making sure the startup is hitting those milestones, making sure the parent company is actually getting what they expected.
So it's almost like they're project managers.
In a way, yes.
Making sure the integration is smooth.
Yeah, you could say that.
Yeah.
But it's more than just oversight. They're actively adding value to, helping the startup grow.
Okay. How so?
Think about it. Order takers have access to all these amazing resources.
That startups wouldn't normally have.
Exactly. Like a huge customer base,
Uh-huh.
established distribution channels, deep industry knowledge.
Not to mention the money.
Oh, absolutely. The financial power of a big corporation. So they're not just providing capital.
They're opening doors.
Yes. Making connections.
Leveraging all the parent company's strengths.
Exactly. It's like giving the startup a turbo boost.
I like that. So they might introduce them to important people within the company, help them navigate all those tricky regulations,
Yep.
maybe even offer mentorship from some experienced executives.
It's a win-win. The startup gets the support, and the parent company gets their solution.
Okay. I can see the benefits for both sides,
Yeah.
but it must require some careful balancing.
Oh, absolutely.
The startup wants to stay independent, but the company wants to see that return on their investment.
That's the key. It's a partnership, but there's always that underlying tension, that push and pull between control and autonomy.
Mhm.
The order taker CVC needs to be mindful of the startup's culture, how they work, while making sure everything is moving towards those goals they set out.
Sounds like a lot of work.
It can be?
But if it works, it really
Yeah,
works.
for sure. Now let's look at those free birds.
Okay, yeah.
Their post-investment phase is completely different.
Because they're not as focused on that integration.
Right. They're more about fostering those high-growth companies, even if they're disruptive.
So they're okay with the startup maybe even competing with the parent company a little.
They are. Remember, they're looking for game changers. The companies that could completely change an industry.
Disruptors.
Yes. They know that real innovation means pushing boundaries, even if it makes people in the parent company a little uncomfortable.
Makes sense. So their support, it's probably less about that integration
Yeah.
and more about connecting the startup to other opportunities.
Exactly. They might introduce them to potential customers, partners, investors even. Help them expand internationally,
Okay.
maybe even connect them with other startups in their portfolio.
So they're like this, I don't know, high-powered networking hub.
Exactly. Opening doors, creating opportunities the startup wouldn't have on their own.
I'm starting to see how these two approaches can actually work together,
Yeah,
both pushing for innovation just in different ways.
absolutely. But eventually, every CVC wants to see that return on their investment.
The bottom line.
Right. So how do they approach their exit strategy?
That's the big question. I bet it's different.
Oh, very different. For order takers, the best case scenario is usually a full acquisition by the parent company.
So they basically bring that technology in-house.
Yep, make it a permanent part of their operations. It's like the ultimate validation of their investment.
Makes sense.
They found the solution they needed, now they own it.
What about the free birds? Less interested in acquisitions, I imagine.
You got it. Remember, they're more like traditional VCs. They're playing the long game.
Looking for those big financial returns?
Exactly. Their ideal exit is usually an IPO or maybe a sale to a bigger company,
Even a competitor.
even a competitor. They're focused on maximizing that financial return. It's all about those big wins.
This has been so eye-opening. I feel like I have a whole new understanding of how these big companies use startups to innovate.
Me too. And what's so interesting is that there's no right or wrong answer, no one size fits all.
Right.
Order takers, free birds, they both have their own strengths, their own ways of approaching the challenges.
And as listeners, it's really interesting to think about which approach we might see in different industries and different companies and what that says about their culture.
That's a great point. So as you continue to explore this world of corporate innovation, ask yourself,
Yeah.
what does a company's CVC strategy say about their appetite for risk, their vision for the future? Are they embracing disruption?
Ooh, that's a great question to ponder. And on that thought-provoking note, we'll wrap up this deep dive. Until next time, keep exploring, keep learning, and keep diving deep into the world of ideas.